Hello, and welcome to the Buzzcast. This podcast is brought to you by those who bring you the Appraisal Buzz newsletter. We publish the Appraisal Buzz twice a week, and we also publish the Appraisal Buzz magazine. It goes out in the spring, and the next issue is due to hit mailboxes in August. My name is Karen Connolly. I'm the VP of Operations for Altera Group. And today we have with us Joan Trice, the founder and CEO of Altera Group, and Matt Simmons of Maxwell, Hendry, and Simmons, LLC, a commercial and residential appraisal and consulting firm located in Fort Myers, Florida, to discuss managing the appraisal process. A quick word from our sponsor, Solidify. At Solidify, they're refining the customer experience. Each appraisal is performed by the nation's top performing appraisers. Their national appraiser network is comprised of committed professionals who go above and beyond for both the lender and the homeowner. Their top appraisers are in turn rewarded with more exposure and more assignments that enable them to grow their business. Solidify ensures the right appraiser on every order, every time. You can find out more at solidify.com. So we're thrilled to be able to bring you an open discussion today between Joan and Matt on the topic of managing the appraisal process in a crisis. Joan, you want to take it from here?
Thanks, Karen. First, I just want to welcome Matt, and good to be on a podcast, I guess, so we can actually have adult communication, but with proper social distancing. Matt, tell us a little bit about yourself and your company and what your practice is like.
Sure. Thanks, Joan. Appreciate you having me. Have always enjoyed getting the Buzz material and working with you guys from time to time on content. So I'm glad to be here. Yeah, as Karen mentioned, Maxwell, Hendry, and Simmons, we're a commercial and residential appraisal and consulting firm here in South Florida, located in Fort Myers. I'm a partner in the firm, manage for the most part day-to-day our residential activities, but also manage the majority of our consulting work that's a little bit more broad in its scope. For those appraisers out there listening, it would be kind of what Advisory Opinion 21 puts in the category of valuation services. And so we do a lot of broad appraisal activity. We've been around in Fort Myers since the 1970s. Practice is split about 50-50 between commercial and residential work. And we do a substantial amount of work for non-lending clients as well. And as I mentioned, we do a lot of consulting. So that's a little bit about us. And glad to be here with you.
Well, thanks, Matt. Well, let's dive right into the fire in our living room, the coronavirus. How is that impacting your day-to-day business?
Yeah, it has been, a fire is the right word. Staying on top of all the moving pieces has been a monumental challenge. And, if you're an appraiser listening out there and, feel just completely overwhelmed with the volume of content that you're expected to process right now with all of these changes, you're not alone. The real challenge is in making sure that you understand for all of your different lines of business and clients what their requirements are, because there isn't consistency. And we wish that there was, of course, but there isn't. The mortgage market isn't uniform in that way. So really, it's been a matter of trying to make sure from a compliance and regulatory standpoint that we've got all of those pieces lined up and know what people are asking for. And frankly, kind of can help inform them on what it is that they should be asking for and what options are available. And then on top of that, of course, the element that we're used to spending time measuring and focusing on, market conditions. That in the middle of all this has been its own challenge. So it's kind of a two-pronged issue at the moment. And there's been, frankly, a lot of early morning, a lot of late nights, trying to stay on top of things throughout the day with different webinars on, trying to digest as much as possible. So it's been like drinking from a fire hose, essentially.
Yeah, and I'm sure your clients are demanding information from you as well. I'm hearing a lot of the same things from other appraisal firms that you're struggling with, and that is every customer is different. And from what I'm seeing too, each lender isn't necessarily that up to date on the guidance as it comes out. They're still trying to do business as usual. Are you seeing some of that as well?
Absolutely. Now, Fannie and Freddie's guidance that was issued, I think there was perhaps a lot of false hope that, okay, great, everything is an exterior now or a desktop. We can kind of move on. Great. And obviously that hasn't been the case. There are all kinds of different layering within the secondary mortgage market of participants and investors who have to sign off on the way that finance appraisal work gets done. And so that's really cut into the notion that we were going to have clarity on these things. So yeah, that's without question what we're seeing. And the other real challenge is communication, clear communication in the middle of this. Because in many instances, and this might help people to understand why it's so difficult to get things changed, at the appraisal level, you might be hearing instructions from an AMC. And that AMC is getting instructions from their underlying lending client. That lending client is getting underlying instructions from the secondary mortgage market and participants there. And they may not even know at times what destination the loan might take. And so you're trying to hedge everything, not really knowing which criteria might apply. I know that doesn't make it any easier for everyone. It certainly doesn't make it easier for us. It's been difficult. But understand that that's why there's still a tremendous amount of ambiguity.
Yeah, that sounds like a challenge you probably, I'm going to guess, have regularly. It's just been exacerbated by this crisis. So
yeah,
not only are you dealing with the virus and all the impacts of that, but because of interest rates being lowered, you're experiencing, I'm sure, just an amazing, unprecedented volume of refinances. Is that an accurate?
Yeah, no, you're absolutely right. About a month and a half ago, as we sit here today, we started seeing a significant increase, and we could tell that it was coming because there was, I believe, at that point, a 0.25% rate cut, and refinance volume shot through the roof. And we could see that on the front end. We knew it was coming. We let our staff know, hey, be ready for this. And we saw it. And so then when this hit, we're dealing with this, obviously, while we're trying to process volume. And the one thing that I guess I would say that is within our control, and this is really for all of us in the process, the lenders, the AMCs, appraisers, clear communication is our best friend right now. One of the worst things we can do is have bad communication or unclear communication. And I'll give you an example. We got an order toward the beginning of this week that was a 1004 exterior, is I think what they were trying to call it. And this was coming through an AMC from an underlying lender. What they were really trying to order was a 1004 desktop with enhanced supplemental standards to include an exterior inspection, which they're well within their rights, of course, to issue whatever supplemental standards they want. But it took 3 or 4 emails back and forth and a phone call and 3 or 4 different iterations of what was being ordered to have clarity on exactly the product and exactly the requested inspection scope. And that, again, that's something we can control. We, to the extent possible, have to do what we can to communicate as clearly as possible. And that's on our end as appraisers, too. That responsibility extends to us.
Right. So what is your mix of clients like? Do you do business with AMCs, banks, non-lenders, all of the above? And let me go ahead and give you the follow-up question to that is where I'm really headed is are you concerned at all about the viability of any of your clients? And are you worried about your accounts receivables, and how are you managing your way through that?
Yeah, that is a great question. So the first part of that, we have a really, really broad client base, and we're blessed in that sense. You know, somewhere around 50-60% of our work on the whole is finance oriented, and the balance is private client work. And there's all kinds of different shades in there of different entities. So yes, AMCs, direct lenders, non-bank lenders, you know, and a whole array of private clients for sure. And municipalities, we do a lot of work for local government. The second part of that, managing receivables and just mainly being aware, I think is a fantastic point to raise. And it's one that I don't think I've heard much discussion of yet. I absolutely think appraisers need to be very, very careful right now about the work that they're accepting, the terms that they accept, and to be vigilant on any aging receivables. I know no one needs something else to add to the task list right now, but being on top of aging receivables, I think, is going to be very important right now. And that's something that we're doing, and frankly, doing it out of necessity on a few projects where the macroeconomic market conditions are clearly impacting things that we're, you know, working on in office, and some of the communication from the clients, you know, or lack thereof, leads us to believe that we should be vigilant about receivables. So, yeah, I'm glad you brought that up. I don't think that's gotten much discussion yet, and it needs to be something that's at the forefront of appraisers' minds.
It hasn't, and that's one of the perils of trying to manage your business through a crisis, is that you're dealing with the personal impact to your staff, potential exposure to the risks of the virus, while trying to keep the business end of it under control as well. Maybe this is a good time for us to take a break, commercial break, so that we can introduce a sponsor. And then when we come back, we're going to revisit the topic of market conditions.
Listen, nobody wants to work more for less money. And to some, the appraisal industry looks like it's headed that way. You have to do more for the same money, and now you have less time to yourself. The great news is DataMaster can change that. With their easy-to-use software, DataMaster lets you spend more time analyzing and less time typing. Plus, you get more information than other data import products. Hey, you can head to www.datamasterusa.com/buzz for more information and to learn how you can save an hour per report. DataMaster provides the right data at the right time for the right decision. Learn more at www.datamasterusa.com/buzz.
All right. Thanks, Karen. Matt, let's get back to the market conditions. Unless you have a crystal ball, which you know, I actually have a magic 8 ball on the corner of my desk, but I don't think that's gonna work for you to write your market conditions within your report. And is specifically, do you have some sort of disclaimer that you're putting in your reports during this time?
Yeah, so thanks for bringing that up. This is a huge, important issue right now. So I'm going to give you our perspective, how we're addressing this, and there's others who may disagree and want to approach it differently, and of course everyone has to make their own decisions. Back at this point now, about 3 weeks ago, put into our report, I don't like to call it a disclaimer. What we've essentially identified it as is an expression of reliability within our reports. And reliability is not a concept, frankly, that I'd spent much time thinking about until we entered into this crisis. It's about a 2-page document that, frankly, it operates chronologically, and it just outlines some significant events as they have unfolded since, I believe the first event is the federal disaster declaration. And again, appraisal reliability is a concept that is addressed. We don't think about it much, but what it serves to accomplish is notify your client that there might be a vacuum of information right now that, if known, would probably be pretty important to this number, but it's not available. And what's critically important here is we are not prognosticators. That is not our role. Elements of market value, of course, are impacted by anticipated future returns, but they're not on the basis of what we think might happen, what we're guessing might happen. We need some form of actual market feedback to do that. So the reason we've kind of addressed reliability initially is to get us through this phase of this has happened. We know it's impactful, but we don't have much to measure it with yet. And depending on the market segment, we have data at this point, some we don't. But it notifies the client that here is this issue, here's what you need to be aware of, and the number is in the context of that. Now, each day that passes, we get more and more crumbs of market feedback. Residentially, because the ability through local MLS to measure activity, we've got better feedback there, and we can get it more quickly. And there is essentially a central repository of data to tap into. Commercially, it's a huge challenge right now. We've issued surveys. We are literally calling everyone who we can identify has written a contract or has a contract pending to get their feedback. I spoke just yesterday with senior housing specialist in Los Angeles. What's going on? What do you have? What are you seeing? Are you issuing forbearances on leases? Because we need that as soon as possible. We want to implement that information, but we can't guess. We don't have to wait to have sales data back to measure. That's, traditionally how we're used to measuring market conditions. We don't have that right now, and frankly, we don't have good information on that for a while. In some sectors of the market, if there continues to be no activity whatsoever, and that is the case in some commercial sectors, it may be months down the road before we have feedback. So we don't have to wait for actual sales, but we do need to understand where the actual participants in each of these different sectors of the market, where they're at on it. So that's kind of how we're addressing it in the moment. And again, that's an evolving daily challenge.
What types of things are you looking at? Days on market, inventory numbers? Are those the kind of...
Yeah.
Is there anything else?
Absolutely. So the first thing that we actually started pulling, and we're pulling it on a daily basis right now, is withdrawn listings. And we've been able to essentially track that, at least as it relates to the Southwest Florida market, March 15th and 16th are, quote unquote, the days. The 15th was when the Fed on a Sunday afternoon issued their emergency rate cut. The 16th, the equities markets open and react. And you had major real estate oriented stocks that plummeted on that day. And you can track that with withdrawn listings and also through pending sales activity. So one of the ways that we're measuring that too is to base that off of previous year cycles. So for example, right now we're pulling data on 2018, 2019, and 2020. And we're overlaying by day those 3 years so that we can see what's going on here, what's abnormal, and it also then accounts for seasonality. So that kind of provides a good way of basing yourself on 2 years that didn't have this inordinate influence.
All right, that makes perfect sense. So let's talk about fees for a minute, and let's talk in the general sense. I don't want you to talk about what your fees are, but we're moving during this period to desktops and drive-bys for the most part. Are your clients expecting your fees to be lower, or are you finding these are equally as time-consuming? What are your thoughts on that?
So both of those things are actually true. they are expecting us to reduce the fees, and we are finding that it's equally time consuming. I'd say, probably 70 or 80% of the folks who have reached out on alternative inspection scope products have mentioned, hey, what would the fee be? And the inference is, of course, that it's lower. Some instances where we've been able to tailor a scope and we understand what we're working with, we might be receptive to that. In others, we're not. I've taken a little bit of issue with the first reaction out of the gate being sending people a message of how cheap will you do it now? And to be honest, a lot of those messages have come out, how cheap will you do it? And oh, by the way, we don't have all of the details lined up. We don't know what the increased supplemental standards are going to be, but how cheap will you do it? And it's kind of like, well, I think we've got that backward. But, and there's been others. In fact, I think the past couple of days, I've seen a little bit more of an understanding both on clarifying what they're requesting and on not trying to fool around with fees. So I'm hopeful that could be trending in the right direction. But for now, yes, there have been, a lot of requests for how much lower can the fee be, that kind of thing.
Yeah, that's unfortunate. And I'm actually hearing from some very smart lenders who have increased fees during this period. There's an unprecedented volume of work. Yeah. Every appraiser, and now, of course, everybody is working from home, whether they want to or not, and they're working, 12-hour days to try to keep up with the volume. So now is not the time for a lender or an AMC to take advantage of their vendors. That's something I preach rather regularly, and this would just seems to me a good time for appraisers to figure out who their good clients are and who their bad clients are.
Totally agree.
And cycle through and find the ones that treat their vendors with respect, so that in these tough times, you're going to go to bat for your really good customers.
Absolutely. Couldn't agree more.
All right. Well, then let's wrap this up. And we really, really appreciate you. I think this is valuable, boots on the ground information that are going to help appraisers manage their way through this crisis. Thank you, Matt.
Yeah, happy to do it. Thanks for having me, and glad to hopefully provide some insight.
Well, thanks, Joan and Matt. We really appreciate that great discussion. I mean, clearly there are other business considerations you should be considering other than just the changes going on right now in the appraisal process. Look for our next Buzzcast. We'll be sending out information on Appraisal Buzz for the next episode, and let us know what you think. You can always contact us at comments@appraisalbuzz.com, and we'll see you on the next episode.